You've seen them, the financial experts on the news, laughing as they say, Bitcoin has no intrinsic value. You've heard legendary investors like Charlie Munger call it disgusting and contrary to the interests of civilization. They call it a bubble, a scam, rat poison, fool's gold. They insist it's not backed by anything. And maybe it's not just them. Maybe it's your friends, your family, or even that skeptical voice in your head asking, how can something purely digital, something you can't touch, be worth anything at all? It's a fair question. It's probably the single biggest hurdle for people trying to understand this technology. They see a string of code that has somehow become more valuable than some of the world's biggest companies, and their brain just screams, that makes no sense. Well, in this video, we're going to take their argument seriously. We're going to walk through their logic, see it from their side, and then we're going to show you what they're missing. The heart of their argument is a concept called intrinsic value, and today we're going to unpack it. I'll show you why Bitcoin's value doesn't come from a government or a company's profits, but from a revolutionary idea, provable digital scarcity. I'll show you why this one property makes it more like digital gold than the skeptics are willing to admit. By the end of this, you won't just have a snappy comeback for your skeptical uncle. You'll have a totally new way of looking at money itself. You'll understand why, in a world where everything can be copied and pasted, something that can't be copied might just be the most important invention of our time. So let's start by giving the critics their due. Let's build the strongest possible case for why they say Bitcoin is worthless. The argument goes something like this. A dollar has value because it's backed by the full faith and credit of the US government, the largest economy and military in the world. You can pay your taxes with it, and you know a store will take it for a loaf of bread. A share of stock has value because it's a legal claim on a company's future profits. If the company does well, you get a piece of that success. It's a productive asset. But Bitcoin? Critics look at Bitcoin and see nothing. It's not issued by a government. There's no CEO, no cash flow, no dividends. There isn't a Bitcoin headquarters you can go visit. To them, its value is propped up only by the hope that some greater fool will buy it from you for more than you paid. Warren Buffett, one of the most respected investors alive, famously made this point. He said if you offered him all the Bitcoin in the world for $25, he wouldn't take it. Why? What would I do with it, he asked. I'd have to sell it back to you one way or another. It isn't going to do anything. To him, an asset has to produce something. Farms produce food, apartments produce rent, businesses produce profits. Bitcoin, in his view, just sits there. His late partner, Charlie Munger, was even more blunt, calling it a financial product invented out of thin air that was only useful to kidnappers and extortionists. This view is common for a generation of investors trained to analyze balance sheets and economic output. When they use that same playbook on Bitcoin, they come up empty. It doesn't fit their model, so they conclude it's worthless. This leads them to see its price as pure speculation, a bubble waiting to pop. And let's be fair, Bitcoin's price is wildly volatile. It's had huge run-ups and gut-wrenching crashes, which only reinforces their belief that it's just a digital gambling token. But this is where their argument hits a wall. And that wall is made of gold. For thousands of years, we've treasured gold as a premier store of value. It sits in central bank vaults all over the world. But what is gold really backed by? What does it do? Sure, a tiny fraction of its demand comes from electronics and dentistry, plus jewelry. But that doesn't explain its multi-trillion-dollar valuation. The vast majority of its value comes from its use as money. You can't eat it, it doesn't pay a dividend, and a gold bar you own today will still be just one gold bar a year from now. It doesn't produce a thing. So why is it valuable? Gold is valuable because of its properties. It's durable, portable, divisible, and fungible. And most importantly, it's scarce. Its supply is limited by geology and how much it costs to mine. No one can just print more gold. Its value comes from a social agreement built over millennia that these properties make it good money, a reliable store of value that outlasts empires. Once you realize gold's value comes from its properties, the whole no intrinsic value argument against Bitcoin starts to crumble. Because Bitcoin was designed to take those exact properties and supercharge them for a digital world. The skeptic says Bitcoin is made from thin air. The truth is the exact opposite. Bitcoin is the first thing we've ever created that has absolute provable scarcity. There is a hard cap of 21 million Bitcoin. That number isn't just a suggestion, it's baked into the code and enforced by a global network of tens of thousands of computers. While it's technically possible to change this limit with a near unanimous social agreement, it's considered practically impossible. Doing so would destroy the very scarcity that gives Bitcoin its value in the first place. Think about what that means. We're surrounded by things that can be copied infinitely. A photo, a song, an article. You can make 1 million copies for free. Our traditional currencies are no different. Central banks can, and do, create trillions of new currency units with a few keystrokes. They call it quantitative easing. This dilutes the value of all the money already out there and eats away at your purchasing power. That's inflation. Your money becomes worth less because someone else decided to make more of it. Bitcoin fixes this. Its supply schedule is totally predictable. We know that every 10 minutes, a new, quote, block of transactions is added, and the miner who validates it gets a reward of new Bitcoin. We also know that every 4 years, in an event called the Halving, that reward gets cut in half. It started at 50 Bitcoin, then went to 25, then 12.5, then 6.25, and after the 2024 halving, it's now 3.125 Bitcoin per block. This continues until around the year 2140, when the last fraction of a Bitcoin is mined and the supply hits 21 million, permanently. This isn't just scarcity, it's programmable scarcity. It's a monetary policy locked in code, immune to the whims of politicians. In a world of unlimited printing, Bitcoin offers certainty. It's a guarantee that the slice of the pie you own will never get smaller because someone else baked a bigger pie. This is what people mean by hard money. When critics say Bitcoin isn't backed by anything, they're missing the point. Bitcoin doesn't need to be backed by something else, because it is the backing. Its value comes from the mathematical certainty of its scarcity. Peter Thiel, the co-founder of PayPal, famously called Bitcoin the online equivalent of gold and a hedge against the whole world falling apart. He understood that in a digital world, you need a digital form of hard money. So when someone says Bitcoin is based on nothing, they're confusing the map for the territory. A dollar bill is the map, a promise, a claim on value that can be changed. Gold and Bitcoin are the territory, the scarce assets themselves. By the way, if this is starting to make sense and things are clicking for you, do me a favor and tap the like button. It really helps the channel and gets this video in front of more people who are just as confused as we were. And if you want to keep exploring what money really is, make sure you subscribe. We have a lot more ground to cover. The digital gold comparison isn't just a marketing slogan. It's a direct, functional breakdown. Let's put them head to head. 1. Scarcity. Gold is scarce because of geology. Bitcoin is scarce because of math. But which one is truly scarcer? We think gold is rare, but we don't actually know the total supply on Earth. If we invent a way to mine asteroids or find a massive new deposit, the supply could shoot up and crash the price. Bitcoin's supply, however, is absolutely finite at 21 million. Everyone knows the number. In the contest of scarcity, Bitcoin isn't just as good as gold, it's better. It's the scarcest asset we know of. 2. Durability. A Roman gold coin is still gold today. It's physically durable. Bitcoin is digitally durable. As long as the network is running, your Bitcoin exists. And that network has been running without a single minute of downtime for over 15 years, securing billions in value. A confirmed transaction on the blockchain can't be reversed or censored. You could argue the blockchain is more durable than a physical metal that can be lost, stolen, or seized. 3. Portability. Here's where the comparison gets wild. Imagine you need to move $1 million of your wealth. In gold, that's about 40 pounds. Try getting that through an airport. Now, imagine $1 million in Bitcoin. You can store it on a device the size of a thumb drive. Better yet, you can simply memorize a 12-word phrase. With that phrase in your head, you can walk across any border with nothing in your pockets and access your wealth from any computer in the world. Bitcoin isn't just an improvement here. It's a total game changer. It's weightless value. 4. Divisibility. You can divide gold, but it's clumsy. You can't really pay for a coffee by shaving off some gold dust. Bitcoin, however, is effortlessly divisible. The smallest unit is a Satoshi, and there are 100 million of them in one Bitcoin. This means you can send thousands of dollars or just a few cents with equal ease, giving it flexibility gold never had. 5. Verifiability. How do you know a gold bar is real? You can't just eyeball it. You need special equipment and have to trust the expert testing it. Counterfeiting is a real problem. How do you verify a Bitcoin transaction? You don't have to trust anyone. The network does it for you, transparently. Every transaction is checked by thousands of computers. Anyone can run the software themselves and verify the entire history of every coin. It's trustless verifiability, a feature gold just doesn't have. When you go down the list, property by property, the conclusion is hard to ignore. Bitcoin has all the traits that made gold good money for centuries, but upgraded for the internet age. So let's go back to the beginning. When someone says Bitcoin has no intrinsic value, what are they really saying? They're saying they don't value decentralized, provable scarcity. They're looking for value to come from a traditional source, a government decree, or a company's profits. They're trying to fit a new kind of asset into an old box, and it's blinding them to the real innovation. They are right that Bitcoin isn't backed by an army, and they're right that it isn't backed by future profits. Bitcoin is backed by something far more powerful in our modern world: mathematics and decentralized consensus. In an era where trust in institutions is fading, where currencies are being printed at a staggering pace, an asset that is nobody's liability and that nobody can make more of is an incredibly powerful idea. The critics see a speculative bubble, but millions around the world are starting to see an escape hatch, a way to opt out of a system that devalues their savings and store their work and time in an asset that is global, secure, and inflation-proof. So the next time you hear an expert on TV call Bitcoin worthless, you can smile, because you know what they're missing. They're still trying to figure out if it fits into their old world, without realizing it might just be the foundation of a new one. What do you think is the most powerful argument for Bitcoin? The scarcity? The portability? Something else? Drop your thoughts in the comments below. I read all of them. And if this video helped clear things up and gave you the confidence to explain it, make sure to subscribe and hit the notification bell so you don't miss our next breakdown. Thanks for watching.